Okay, good morning, good afternoon, everybody. Today is November 26th, day after Thanksgiving. This is your weekly take on the market. It's 11:30 Pacific time, so market's been closed for an hour and a half here. My name is Scott St. Clair. I'm your host. I'm the manager of the Premium Product Group here at IBD. Here is our disclaimer. Take a moment to read this. I'm not licensed. Anything I say is not considered investment advice. We will talk about stocks. Hopefully you are doing this on your own. Okay, great. All right, so we will talk about the markets. Today was quite a day. We will go through the industry groups. We'll talk about some stocks, and then we'll do the obligatory quote of the week, right? I almost forgot. So here's a chart of the NASDAQ, and this should be up to date, although the volume is probably not going to be up to date. But today was a lousy day. We were down, what, 2%, 2.25%. So you have, distribution day there, another one possibly there, maybe not, but you're a little bit, into the beginning of what could be a correction or whatever. It doesn't matter what it is. I think it's not, although the news today may have been a surprise, the fact that the market's down probably shouldn't have surprised a whole lot of people. The breadth, the lack of continuation and stocks breaking out has been pretty telling for the last weeks to months. So maybe you'll come down and test the 50-day, and then who knows from there. The relative strength in the NASDAQ is just awful. It's bothered me for a long time, and it's because there's very few stocks in the NASDAQ that are participating. Nvidia, Apple, Amazon, and maybe some others, but mostly the NASDAQ is gotten hit pretty hard. There's been a lot of stocks that are in flat out bear markets on the NASDAQ: Zoom, Peloton, et cetera, Teladoc. So a lot of leadership has come and gone, and there's, you'll get some whole new leadership. The S&P, the volume is not going to be accurate this early, but I'm pretty certain today will be another distribution day. I don't know what IBD will do. I'm pretty certain they'll probably go to uptrend under pressure, because you are above the 50-day. It's kind of hard to go on a market correction above the 50-day, but the signs are there. They don't want to sit on the railroad tracks, would be my guess. So I'm fairly certain they'll go to uptrend under pressure. And then we'll see what Monday brings. Today was a weird day. It closed very poorly, but you have the weekend, and kind of the news kind of surprised everyone. So maybe that led to just, wholesale selling, and then we'll see what Monday brings. Let's just go on to the industry groups, because I don't really think there's a whole lot to say about the indexes. I think they're being held up by the big boys. The institutions can't go, they can't get out. They can't go to 60% invested. So they hide. They hide in the Amazons, the Facebooks, the Apples, the Googles, everything. They hide in the big liquid stuff. And, maybe even something like Pfizer, they can hide in that pretty good. That one's acting fairly well, obviously. So, those are going to hold up the index while everything else is, getting torched in the background. Industry groups, let's go to Open Stock Ideas, weekly review, 197. Initially, there'll be an alphabetical order. Let's go ahead and click the industry group rank. It's going to bring the worst group to the top. Let's go ahead and reverse the order. Retail department stores is number one. Don't tell that to Nordstrom, which had its worst day in its stock market history, I think, a few days ago. The only reason I mentioned that, my wife used to work at Nordstrom when I first met her, and so I always think of when I saw that headline, I always thought, wow. But that I can't confirm or deny that that's the truth, but that looks pretty bad. 29% in one day, retail department stores. I know there's some others that have gotten hit, but they've been held up by Dillard's, which was acting super well till today. And what else is Dick's Sporting Goods holding up really well? There's oops, that's not in that group. What is holding up that group so well, besides Dillard's? Well, let's go. Let's go to the weekly chart. Oh, Macy's. That's made a huge move off the bottom. That's made a helped that group as well. This group looks really, really tired. I would not be, there's 6 stocks in here. There's not going to be a ton of ideas in this area. I think that game is over. Semiconductor fabless, that's the NVIDIAs of the world, right? Is AMD considered fabless? So those two are 2 giant, great stocks holding up really, really well. Wow, look at AMD barely off considering. Energy coal, a lot like department stores, made a huge move off the bottom. BTU went from 5 to 20, and now it's at 10. So it's down 50% off the highs, but the group is holding up. Remember, this is actually a good lesson. Some people will ask, well, how can this stock have a relative strength of 99? Okay, it's down 50% and the RS rating is 99. This is very important. Most of you probably already know that, so go get a cup of coffee. But for those of you that are using the RS rating as a timing tool, this is a very important lesson. From the RS rating is basically looking back 12 months. Okay, it's not a perfect 12 months because half of it is 60% weighting. Then this portion, the 6-month, is a 20% weighting, and then the 3-month is a 20% weighting as well. So it's not a perfect look back for trailing 12 months because the front months, the 3 and 6, are weighted. What's happening now is more important. That's why Bill set it up that way. But if you just think about it, just from a simplistic terms, if I look back 12 months, let's go back to December or November. Let's just start right here, and that should be close enough. And in that time period, BTU has gone from $1, holy smokes, to 10. So it's gone from $1 to 10. Forget about where it was. That's not relevant at this very moment. It's gone from $1 to 10. So how many other stocks in our database have gone up roughly 8.5, 9-fold? Very, very few. In fact, there might be hardly any. So that's why the relative strength versus all other stocks is 99. Now, this will gradually go down for sure. The relative strength line, this is a much better tool for timing your purchases and or looking for unusual weakness. You can see when BTU made a new high here, almost, did it make a new high? It missed by pennies, okay? But when it did that, and let's go to the daily just to make it easier to see. You can see that when on that day, its relative strength was making new highs. It just peaked above the previous, but the very next day was awful. That was your sell signal. And if you're using your weekly charts to get out of these positions, and I don't know how many of you were in BTU, probably very few of you, but it's the same concept for all stocks. You can see that by the time the week was up, the relative strength was just disastrous. So you have a non-confirmation, right? Try to make a new high, relative strength didn't confirm that new high. That's your sell signal. Now, I'll be the first to admit, if I have something that closes at 1972 and the very next day it's 15 or 16, it's very difficult to sell it. But I almost always just puke it up by the end of the day. If I was in a stock like that, I would just be puking it by the end of the day. Worst case, because something's wrong, it's changed. And 15 was an awful sell that day, and it looks fantastic now. So, fast forward 3, 6, 12 weeks, this RS rating is going to be a lot lower for sure. We're, barring some kind of weird move back up. If you want to see the 3 and 6 month ratings, and eventually we're going to add these, well, I take that back. I forgot. We have added them. Okay. Because before you had to add it to your own column header down here. Bingo. Perfect. This is exactly what I want. This is something that I used to do, and it creates an extra step. This alone will probably save me 25 minutes a weekend. So the 3-month RS for BTU is 12. 12. In the last 3 months, it's underperformed practically the whole database. Its 6-month is 81, just okay, not that great. So when you're in something, you can spot divergences. I'm not saying it's easy, but you can spot them. If you have a stock with an RS of 99, and then the RS 3-month is 95, 91, 87, 80, it's going the wrong way, right? It might be holding up because the market's so strong or the stock is trying to resist, but I always look for those divergences, and it works the other way. If this was a stock I was interested in and the RS was 80, that wouldn't be that exciting to me. That would be a little low. But if the 3-month RS was 91 and the 6-month RS was 85, I could see that it's starting to show strength versus previously. That would be kind of a tell the other way. So get used to it, look at it, see if it provides any value add for you. But the main thing, the main lesson is, I know this is long-winded, apologize, but it just jumped out at me. Like I said, I don't prepare these at all, but I all of a sudden I just thought of all the emails that I get and we'll start getting probably if the market keeps going down. Why is XYZ have an RS rating of 99 or 98? And it's because of the big move it's made from there to there. All right. So let's go back to the industry groups. Coal, U.S. oil and gas got blitzed today. It was holding up, but I think oil was down over 10% today. Terrible day. Auto, Tesla, Ferrari holding up. It's the same story. I just don't see any signal yet in the industry groups on where the market might be looking for, future strength. Stocks to watch. I don't really have a whole lot. I thought that CNQ looked pretty good bouncing off the 50-day, but just had a lousy day today. And PXD, I thought bouncing off the 50-day as well, but it had a lousy day today, although not as bad. And they still might hold up, but oil just, down 11%. This looks pretty broken. It's going to take some time probably if it's going to come back. So it doesn't look like there just isn't a lot to do here. It just doesn't look like a market that you want to have a lot of exposure on. If you have Tesla and you just don't want to sell it, okay, no problem. Sure is acting well. It sure refuses to go down. My experience is if this gets bad enough, I don't know why I have all those alerts there, it'll go down. But you know what? It'll be the last to go down. So it'll go down right at the moment you really want to start being bullish and thinking about what's going to happen for the next wave up. But the hard part is if you've had all these stocks, Nvidia, Tesla, since they're the best stocks, they go down the last. And so it's hard to change your mindset when your stocks are getting crushed, right? You probably are out of the Teladocs and the Zooms of the world, hopefully, because they've just given you 50 sell signals along the way. But if you're holding on to an Amazon or an Nvidia or Google or Tesla, they're holding up fine. So they'll be the clue to me if they finally smack those that the correction is nearing its end. Now, that might also mean that you get a wave up, and then if we go into a bear market, you get another wave down. That's what makes bear markets so difficult, is because of all the waves. So here's the NASDAQ in 2001, and this is like remember, this is like I don't know, textbook's not the right word, but an extraordinary situation. Not all bear markets are like that, but this is the one that I lived through. Or let's just go back to 1998. That was the first real bear market that really kind of cut my teeth. And you can see you go up, then you wave down. And then this blue week right here, let's see if we can go to the daily. So you come down and then you run up, 1750 to 1874. What's that, 125 roughly? That's like 7%. So if you think the market's in trouble and you're short, and the Nasdaq rallies 7%, the stocks that you're short probably rally 15 to 20%. And they just drive you out. And then wham, the market just gets torched. And then you get another huge rally, which is very tempting to be in. 1769. That's what? Gosh, that might be. That's see, again, I should be prepared, but bear with me here. I'm terrible at math. 250 divided by 1475, and I'm just gonna go. It's 16% or so, 17%. Huge rally. If you were short, you just no chance. You just get run over, and then another huge wave down before you finally get a follow through day and a new wave up. So it'll be choppy along the way if that's what were to happen. So the good news is let's talk about good news. There's a lot of new merchandise out there, and some of these companies will work. A lot of them will go away, but some of them will work. So the kind of the standard, I think, for what happens to most IPOs, at least lately, we're going to look at Twilio, is this. Twilio goes public, fantastic company. The market loves what they do. It runs from 20 to 70. And I was in Twilio coming out of this space, I remember, and the 8-week hold rule got triggered, and it was just brutal. You know, this from here to here is like 25%. It was a long way down. And this was week 8. So I think this might be the only time that I truly held all 8 weeks for an 8-week hold rule. And it just wore me out. I was just like this, because the move from 66 down to 49 and change just had me just questioning what I was doing. Just too much for me, especially with the kind of size I want to put on. But and then it gets hit, and if we fast forward, I mean, it got hit hard, right? It went from A70 down to 27. It's a long way down. Let's fast forward again. And, you know, you might love Twilio and you might think it's the greatest thing since sliced bread, and you were right. But there's very few, at least traders / investors, that are going to survive all of this. It's a long time, and it's a long way down. From 70 to where it finally bottoms, roughly 23, 50 points or 47 points, 67%. And then it heads up, and it turns out to be a great company and a great stock. Very difficult stock. I didn't make as much money in Twilio as I feel like I should have, because it's very difficult. I'm not going to hold through this. I'm going to get shaken out a couple times here, but this wasn't a very good trading stock. You could see once you bought it, there was no base. You really had to know what you own and just hold it. And I'm just not very good at that, unfortunately. But the key is this. This tends to happen a lot, and versus like the Google, which is the perfect scenario where it just keeps running. Or there's been a number of examples for sure throughout history. But DLO, let's go back to now. Seems like a great company. The fundamentals are super good. Stock's terrible. And if it's going to go through the Twilio kind of model, it's going to go sideways for a long, long time. Task, another one that did really well, ran up a bunch, and the fundamentals seem pretty good, although the earnings are slowing down. Twilio model, a long sideways action. Asan, a little bit more meat on the bone. This one was really good, and you actually had a buy point. But this is your first really bad week. You've got your sell signal here, a lot like Twilio had. Let's go back to the original Twilio sell signal. Right there. Breaks the 50-day, really bad 10-week line, first sell signal. So Asan has its first defensive sell signal. If you've been in this for a long time, you're looking for a signal, you've got it. DOCN didn't quite break the line just yet. That looks pretty toppy. same thing. So if these companies are going to turn out to be game changers, and there's like Net kind of went through that a little bit. This one is acting really well, but kind of went through that same thing down in here. Globe is in that same group. Maybe it needs that same type of thing. One thing that I noticed with Globe is you've got some big volume, heavy volume without further price progress down that week and this week. HVWW PFD, right? That's what Bill would mark on his charts. Let me see if I can pull over what it looks like when Bill sees this type of action. This is really big action for me. And the owners and funds, you've got Fidelity Contra in there, although it's a tiny position. That's kind of what he does. He starts tiny. If the stock earns more of his money with going up, he adds to it. Artisan, you can see actually I have a lot of the other funds that I like to follow are flagged as well. So I have quite a few flags, and Fidelity is just, if you do Fidelity for this company, it's like every single mutual fund at Fidelity owns this stock. I don't know. That's kind of an interesting thing. There must be something about that business. It doesn't mean the stock's going to hold up correct, because maybe we're in a bear market. There's no earnings and sales. And if the market does that, it's going to not survive that. But let's go ahead and see if I can pull over the Levitz example. And I would play this for you. This is from the model book stock at IBD's home study course. I'm not certain if you'll be able to hear Bill's voice, but he talks about this. But this is what I'm talking about. Increased volume without further price progress down is buying support. So when the stock stops going down, and you can't see the volume here because it's cut off here on this video. Could be my screen resolution, but I have the book here, and you get the big volume spikes and the stock stops going down. So you should probably that's something you could look for. If you're looking for stocks that don't want to go down, that could be one of your ways to do that. I don't know if I would buy like that. I probably wouldn't buy like that. Maybe if I really love the name, I might buy like that, but I would have to be very, very underinvested. So that it's a possibility. But really, I'm looking for this because a lot of times I'll see that you go to these seminars and Bill will have that marked way down here on the chart, and the chart stocks up here. It was down there at 100 and stocks at 500. It's like, well, why didn't I notice that down there? Well, it's because I wasn't looking for it. So you can see with Levitz, we actually went into a bear market. Let's see if I can pull up the market for you. You can see it's making a lower low right there. Couple of lows. That's the S&P across top, but Levitz just kept going up. And he talked about how, he was always looking for patterns, which is why he didn't really participate all that great in Levitz in this area, because he didn't really understand or know of like the 10-week line as a potential buy point back then. So you've got that type of support. So those are some stocks that are on my radar, but overall, I think the market's lousy. No surprise. Okay, let's do the quote of the week. Scott Bessent was on a podcast. I really like listening to him. He worked with George Soros and Jim Rogers and Jim Chanos, one of the most famous long-term short sellers. So he's worked with some of the biggest, greatest investors ever. It's kind of cool listening to him on a podcast. He says, I can see why Jim Rogers, who he's talking about, and George Soros combined into this investment management juggernaut. George has a saying, I just need enough information to make a decision. George Soros is famous for saying, shoot first, investigate later. And Jim needs all the information. So that's what made them such a great team is Rogers would, find the ideas, but George would, just trade them. He just, that's enough. I have enough information to make a decision and go from there. Kind of like what we do with fundamentals and technicals. Right? We want to have both ideally. I want to have the stock tell us that, hey, maybe the stock could go up, and the fundamentals ideally should be there or just starting to come in there or improving. Maybe they're not quite as big as we'd like, but they're starting to improve. Okay, I know this one was long. I apologize, but it's based on the market environment and a couple of things that jumped out at me. I thought they were very relevant. 800-831-2525. Reach us at marketsmith.com. Thank you, guys. Have a great holiday, and we will talk to you next week. Bye-bye.